Happy Monday, everybody. This is your market update for June 10th. I hope everyone had a great 4th of July holiday week. I'm sorry I was a bit MIA last week. I just figured as a result of the shortened trading week due to the holiday, as well as the direction the market was heading, especially on Wednesday and Thursday, due to some unfriendly trading news in both the stock market and bond market, I just would take the week off, to be honest with you. We did have somewhat of a reversal on Friday due to a jobs report that showed job creation that was less than the market had anticipated, but a lot of damage was done on Wednesday and Thursday in the markets, and I figured it would just be best to start fresh this week, which I'm glad that I did. We certainly have a lot more of a positive direction about the stock market and bond market today on the back of that jobs report on Friday, as well as the anticipation for the inflation reports that are coming out this week. And also we're kicking off the earnings season for the second quarter of the year. Both the stock market and bond market today started off on a positive note for the most part. Stocks, the Dow currently is up 140 points. S&P 500 is up 3 points. NASDAQ is down on the day, but only 17 points. Mortgage-backed securities started off the day up 6 basis points, but have continued to rally. And last I looked a few moments ago, we're up 42 basis points. So certainly making some positive headway and taking a chunk out of what we lost last week, although we still have a lot more to go to gain back what we lost last week. But hopefully with some inflation news this week that continues to support that inflation is falling, we'll gain back a lot of what we lost last week and get interest rates headed back in the right direction. We do have this week, I mentioned the inflation reports on Tuesday. We have the Business Optimism Index. That's tomorrow. Wednesday, we have mortgage application data and the CPI report, which is a consumer price index that shows inflation on a consumer level. Thursday, we have initial jobless claims, as well as the PPI report, which is the producer price index that shows inflation on a wholesale level. Market is expecting that both of those numbers are going to show more meaningful declines in inflation. Hopefully that is in fact the case. If the inflation numbers are supporting that inflation is cooling more than what the market is anticipating, we should get some really solid bond-friendly news. We should see a continued rally in mortgage-backed securities, and hopefully some improvement in mortgage pricing as well. I think mortgage rates last week per Thursday cracked back over into the 7s for the 30-year fix. So would like to see that back down into the 6s. We'll continue to keep you updated this week. I hope that you have a great Monday, and I will see you tomorrow.